Hello friends, I'm Sorbh Gupta from Bajaj Finserv Mutual Fund. Indian equity markets extended their recovery in July. Sentiment was supported by encouraging start to Q1 FY27 earnings and renewed foreign portfolio inflows. Global macroeconomics and geopolitical risk, however, remain elevated. Renewed tensions in the Middle East and disruptions around the Strait of Hormuz drove a sharp rebound in crude oil prices during July, reviving concerns around imported inflation, India's current account, and the rupee. Interest rates across developed economies also remain relatively high, with uncertainty regarding global growth and capital flows continues to influence market sentiment. On the domestic front, the June quarter earnings has begun on an encouraging note, although performance remains uneven across sectors. Private banks continue to report healthy credit growth and broadly resilient asset quality, but movements in margins and deposit growth requires some monitoring. Consumer and automobile demand trends have shown signs of improvement, while infrastructure activity continues to benefit from government capital expenditure and a gradual recovery in private investments. The sustainability and breadth of earnings growth will be an important driver of market returns over the coming quarters. The southwest monsoon improved during July and covered the entire country, helping reduce some of the concerns created by the weak start to the season. Nevertheless, the regional and temporal distribution of rainfall remains uneven. Rainfall trends, reservoir levels, and kharif sowing will remain an important monitorable for rural demand and food inflation. Auto ancillaries, healthcare, and select private banks continue to offer attractive risk-reward opportunities. Within these segments, preference remains to companies with strong balance sheets, sustainable competitive advantage, and visible earning growth. IT services witnessed a sharp recovery during July as concern around AI-led demand disruption eased and valuation attracted investor interest. However, the rally has reduced the margin of safety, while medium-term uncertainty around pricing, hiring intensity, and AI-related demand deflation remains. We therefore retain a cautious and selective stance on the sector pending clear evidence of sustainable revenue growth. Investors should remain focused on their long-term asset allocation and avoid reacting to short-term market volatility. Given elevated valuations in parts of the market and continued global uncertainty, periodic correction should be viewed as an opportunity to increase equity exposure in a disciplined and staggered manner. A 3-month systematic transfer plan remains suitable for investing in large caps and flexi cap funds. For small cap exposure, a systematic investment plan with a minimum 5-year horizon remains appropriate. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.